Hey everyone, welcome back to Corporate Decoder. Today, L&I just filed an 8K about a shareholder vote on a reverse stock split, and I'm seeing a classic move that often precedes more trouble. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing shows shareholders approved a reverse stock split, a move often used to boost a stock price, but it also signals underlying struggles. Lunai Bioworks Incorporated, a company in the biotechnology space, has filed a Form 8K, which is essentially a report for significant events. The key event here happened on May 8th, 2026, when the company held a special meeting for its shareholders. The main purpose of this meeting was to vote on a couple of important proposals. Proposal 1 was to approve a reverse stock split. This means they can combine existing shares into fewer higher priced shares. Think of it like exchanging 10 $1 bills for one $10 bill. The company can choose a ratio anywhere between splitting 3 old shares into one new share or 30 old shares into one new share. The board gets to decide the final ratio, and the shareholders approved it, with a significant majority voting in favour. This is a pretty common move for companies whose stock price has fallen very low, often to avoid being delisted from major stock exchanges, like the NASDAQ. Proposal 2 was to allow the meeting to be adjourned if needed. This is basically a backup plan to give the company more time to gather votes if they weren't sure they had enough support for the first proposal. This proposal also passed easily. It seems the company was really pushing for this reverse stock split. Now, the company includes these forward-looking statements, which are essentially their best guesses about the future. They mention that the reverse stock split is intended to help them meet NASDAQ's continued listing requirements. But they also warn that the split might not actually solve their problems with NASDAQ. They're saying, "We hope this works, but no guarantees." Companies often go this route to try and stay listed, but historically, about half of microcap companies that do reverse splits eventually get delisted anyway. Think of historical examples like Kodak back in 2021, which did a 1 for 20 reverse split, and unfortunately, holders saw a roughly 40% additional drawdown over the following 90 days. A $1,000 investment in that scenario became about $600. It is a tough path. This report is signed by David Weinstein, the Chief Executive Officer, and dated May 13th, 2026. So, what is the big picture here? Lunai Bioworks is making a move to boost its stock price, likely to avoid being kicked off the NASDAQ while shareholders have approved it. This is often a sign of underlying weakness rather than a sign of strength. It is a signal that the stock price has fallen significantly and they're trying to find a way to stay listed. The real question is whether this reverse split will actually help them improve their business or just delay the inevitable. The company itself acknowledges that the split may not solve their listing issues. The real risk I'm watching is whether this reverse split is just a temporary fix or if the company has a solid plan to improve its core business and financials beyond just manipulating the stock price. It is a critical distinction for investors. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.